Rahul Shah as well joins in on the show right now to talk about which way the markets are going to be headed. And Rahul, can't take our eyes away from what's happening within the power sector. I mean, even as of yesterday, be it Tata Power, NTPC, PFC, REC, most of these stocks are already at a 52-week high. A, what's driving this move? And B, would you recommend buying into these names afresh or even adding positions here?
Hi, good morning. I think, as rightly pointed out, I think power sectors has been buzzing. I think if you look at Tata Power, if you look at JSW Energy, which is also trading almost at the 52-week high, and obviously, as you rightly mentioned, the power finance companies, PFC and REC, both are also trading at 52-week high. So I think two things were visible. I think one is obviously the power demand is continuing to go on a rise, and which will continue, which we saw in the last quarter also. That I think that the demand for them and the consumption was also at very high levels. So if you look at the PSU pack, I think NTPC, which after a long time, I think came into a new range. I think if I look at it post listing, maybe 10, 12 years back, or maybe more than that, I think post that, I think we've seen the comeback of NTPC coming back to those levels. Similarly, entire power sector have been seeing a buzz, be it private as well as or the public. Now coming back to PFC and REC, I think if you look at it, strong commentary from the numbers, both the management which gave the post the numbers, and secondly, I think still they are trading at a good valuations and cheap valuations. I think that could be some more upside with a dividend yield of 8 to 8.5%, with a dividend payout policy of 30%, and I think way they come back in the power as a sector which is coming back. So I think this entire sector will get re-rated, and still I think there's a lot of room for them, PFC and REC especially. So I think if somebody wants to play a proxy to power, then I think these are the companies with a limited downside, and then I think that would be a good upside from your end also.
Let's move on. Stocks on the editor's radar. And Aisha, you stole our stocks, but we'll be discussing those power stocks in greater detail. Talk a little bit more about the power demand as well, which is at all-time highs, Nikunj, and now a lot of factors as well. And what does this mean for the likes of NTPC, etc.?
Why has demand gone higher? It's largely because of monsoon and the weather conditions. It is higher than what the peak summer was. So it's not always weather. I think it's also the demand which is coming from the industrial sector also. What's interesting, Avan, here is that we don't talk about it, is that if you look at the pattern in the power demand, it's not universal. So the day demand is less and the night demand is high. And you would say, kya ho raha hai? I mean, it is not that we're consuming more power in the night and we're consuming less power in the day. That's largely because India has done a lot of solar capacity addition. Since you've done a lot of solar capacity addition, post the sunset, the power which is getting generated from those solar capacity which have got added, I think is less. As a result, the power demand surge and the demand from the traditional thermal power utilities, I think, is very high. And that is why you could ask yourself, okay, demand is high and demand in the evening is high. Who are the companies who would benefit? And that's where this graphic comes in. Companies which have traditional source of energy, and that's where NTPC scores and Tata Power scores. Tata Power has large installed capacity, but they are not expanding in thermal. NTPC has large thermal capacity, but they're committed to expand both non-renewable and renewable. So if you're looking at this as a trend, which is that power prices will remain elevated, power demand will remain high, winter demand is going to be strong, this mismatch of demand night more than day, then you're actually looking at a very differentiated approach. So go for folks which have existing capacity, which will benefit because of this deep surge. Second, power cannot be stored, but JSW Energy is saying that we will be able to store power. You store power with this new technology they're coming with. So that's become the other port of call. So the theme here is power demand, but within that, day demand is less, night demand is more. And if the demand comes, what is available will be sold more, which means that existing companies with capacity, I think they will outperform. So don't go for the power capex theme right now.
Be selective.
Don't go for the power capex theme. Don't go for companies which will benefit when the power capex will start. Power demand is real. It's here and now. And here and now, existing folks which have thermal capacity, less solar will benefit.
Less solar are likely to benefit. Aisha, that's the view on the editor's radar.
Okay, power, and what a move in these power names, right? Kunal, what about some of the charts like in NTPC, PFC, REC, and yesterday's big mover, Tata Power?
Yeah, I think NTPC specifically looks all the more very attractive because the stock has come out of a major correction as well as a downtrend. I think if I'm not wrong, there was this 8 or 9 consecutive months of uptrend for NTPC over the last many months, as well as the prices have managed to break out of two important hurdles: 180 mark, which was a huge resistance for NTPC, and then 200 levels again, which has been a major psychological factor or resistance for NTPC for years gone by. So I believe that that's a more powerful breakout. Even in the last 4-5 days of this market downtrend or sideways range for the indices, the stock has been a lot more sideways and it's forming a bullish flag pattern. So I'd be very bullish on NTPC from even from current levels and expecting the stock to continue to move up higher steadily. Tata Power, on the other hand, the stock has a major resistance at the 250 to 55 odd mark. This was the previous swing high for the stock, I think a week or two back, and the stock had taken major resistance over there. There were some open interest factors which had changed for Tata Power at those levels. So we'll have to wait out for a reconfirmation of a breakout about 250 levels to be bullish again on Tata Power.
Rahul, the other pocket which has been very vibrant of late is pharmaceuticals, right? And I just want to pick up on Oro Pharma. The fact that the stock has already risen up 90% of late. A couple of brokerages are now downgrading it to a sell, saying that the catch-up or rather the run-up in the stock has been very steep and the US generic conditions may not actually sustain. Wanted to understand what's your preference within the pharma sector?
So I think two things have happened in the pharma space if we look at it. Obviously, I think post-COVID, I think the numbers were not so great in last year and a half, but like last 2 quarters back to back, I think there has been a surge in the numbers, and I think a lot of entire as a sector we've seen a good numbers which has come up across the board. So it's not only in the large cap but also in the mid cap space. So if we start from say maybe a Sun with a superb numbers, both domestic as well as global, and I think secondly specialty chemical division has also done very well. Secondly, if we come back to a place like say Gland Pharma, which had last 3-4 quarters were very volatile, and then post that and last quarter number which came up, I think Q1 quarter number was robust quarter, and I think we saw the price momentum. The stock which has given a highest return in a 2 months if you look at or maybe on a quarter over quarter is Gland Pharma. So now coming to Oro, I think again the stock has done well. Last 2-3 quarters the numbers have been very static and a good set of numbers for Oro as well. The stock still remains with a growth trajectory on Oro. So I think Oro will also continue to do well, and I think where the markets are at right now, I think people are looking for a defensive bet, and where the numbers have also come much ahead. So I think preference obviously being the Sun, being the leader in the entire space, followed by obviously Oro and Lupin. All these 3 stocks looks quite promising, and I think Gland, which have been very volatile. So I think now the numbers street can expect a consistency of the numbers, and I think where the management has given a strong commentary will also continue to do well. So I think these 3-4 names should do well in a pharma as a whole.
We got Naresh, I'm going to discuss an odd one out. When I say odd one out, literally an odd one out, and that's Tidal Limited. Yesterday, the stock actually just went, surged on strong volumes. 36 rupees, 10% higher volumes, way above the 10-day average. One day wonder or anything more?
So I would say there could be more legs to it. There are 2 reasons. One, the volumes are almost 10 to 20 times the normal average volumes. The volumes were lower, but if you look at what has happened to the stock was at 70 rupees in the previous cycle, and it went up in 2021 from 10 rupees to 70, and 70 went back to 25 to 30 zone. So it has corrected, and even now it is down 50% from the top. Then second part is what has happened to the rest of the sectoral names. So if you look at Wellspun India, there has been a strong rally over the last few months. There has been a strong rally in Indocount Industries. So all these players, even a Himmat Singh Seed, which is the one which has underperformed similar to Trident, has also moved up. So there is a case for Trident to go back at least towards that 40-45 mark. So for any fade off today could be a buying opportunity, buying closer to 34-35. And eventually this could also play a catch up with the rest of the sector. So positive on the stock purely from the aspect of the large correction as well as the sectoral trend.
Which is at a 10-year high, and made a fresh 10-year high yesterday was actually Praj Industries, and it's been a tough stock to call off late, and finally it's above 500.
Yeah, but I think the last 4 months have actually been much better for Praj as compared to the last 2 years. The last 2 years, it was very difficult to call the trends for Praj, for the sugar stocks, because they were absolutely sideways. Even, I think there was a point where many of these stocks were trading or reeling below their 200 moving averages, respectively. But I think the last 4 months have changed the texture for these stocks. Praj specifically has managed to come out of this 2 years of consolidation. The previous high in 2021-22 for the stock was around 470, 475. That's taken out for the stock quite comfortably. So I think it's a start of a sweet trend for Praj Industries over the last 3-4 months. And when you look at this in the entirety over the last 4 or 5 years, 2020 low for Praj Industries was around 50 or 55 odd rupees. From there, the stock has almost gone 10x. So when you expect the stock, or rather when you see the stock going into a 7x, 8x kind of return in a short span of time, you're bound to see these stocks going into a time-wise correction. That's happened for Praj Industries. And what the stock has shown is a breakout of this time-wise consolidation. So this should augur very well for the stock over the medium to long term.
The other cluster of names which was very active yesterday and has been off late is the Adani group of names, be it in Adani Enterprises, Adani Ports, Adani Power. The entire, group entity stocks were actually holding out in trade. Of course, there's news flow as well with regards to Adani Enterprises. The promoter has acquired an additional 2.25% stake from August 7th to 18th. Stake has now risen to almost touching 70% at 69.87%. But yeah, most of these group entities were flying high in trade. Naresh, any trading opportunity in any of the Adani names?
First itself would be Adani Power on dips, because that's a stock which has gone beyond the 27 Jan prices, which is where the fall started in the Adani group. We've seen a big block deal. So going forward, 300, 310 should be a base. This could surprise on the way up. And second could be Adani Transmission, which has corrected the most, and we are seeing power as a sector doing well. So these are the two names where one could look at it. Adani Ports actually moved up quite a bit in the last 3 sessions. Otherwise, on dips, that's been another stock which has crossed back the January highs. So would try to focus on companies which have actually been able to digest the whole fall and taken a new move. So Adani Power looks interesting on dips, Adani Ports, and a risky bet would be Adani Transmission.
The take coming in on some of the Adani group names and where we scout for trading opportunities. But let's shift focus and talk about Varun Beverages. The company has given a steady set of gains since it listed in 2017 and has also managed to outperform the Nifty FMCG index so far this year. What's aiding the stock though? Vinny is here with more details on that. Vinny?
Good morning, and talking about Varun Beverages, and since the time we have seen since listing, look at the gains that have come in the stock price as well. It's been a consistent compounder is what we could call it so far. And just in the last couple of years and last year, when you look at it, 123% gains that the stock has seen. Even YTD performance when you're looking at as of now, Varun Beverages is outperforming the Nifty FMCG index. It's outperforming most of its peers in terms of the stock move as well. Look at it in terms of Nifty FMCG, seen a 17% gain, while Varun Beverages has managed to see a 36% gain. Now, when you look at it also in terms of market cap, just in the last 1 year, exactly today when we looked at the market cap, it was at 65,000 crores in terms of Varun Beverages market cap. Now, it's above Britannia's market cap. It's at 1.16 lakh crores currently. So it has crossed the market cap of most of the FMCG companies as well, whether it's Britannia, GCPL or Dabur as well. So yes, very strong up move that we have seen coming in Varun Beverages overall. Now, why is that so? When you look at it, we're seeing an uptick in terms of the beverage category as a whole. The penetration of that has increased, and that also aids in terms of Varun Beverages. Other than that, despite it, being a lower penetration compared to other FMCG companies, they have managed to see a rural volume also and sharp increase in terms of rural volume growth as well. Also, the main company, that is PepsiCo, counts Varun Beverages as a very important part of their business, and they're giving it a lot of contribution, and in terms of adding business to Varun Beverages as well, and in terms of territories in South Africa, they are doing quite well. So the international business in terms of bottling for Varun Beverages, that has been quite strong, whether in Morocco or Zimbabwe, that has seen a significant growth as well. They're focusing on the high margin business, that's the Sting business and the energy drink business as well, while in terms of obviously the growth in the brands of Sting as well as their milk-based beverages also has seen very good growth, as well as the asset turn of around 8 to 2 times is what the company is expecting for the new investments and new capex that they are making. So that's also going to be very interesting. Now, obviously, in terms of the bear case, when you worry is like, the competition that we're seeing in the D2C business. The company is trading at a premium compared to other FMCG players when you compare in terms of the valuation. It is quite expensive compared to other FMCG players. While currently in terms of 5-year average also for Varun Beverages itself is also quite higher. So that's a concern that one watches out for. But in terms of growth, the growth story seems to be very strong for Varun Beverages and also in terms of demand trends.
Varun Beverages, we all know that stock, don't we? Well, why? Well, they're the bottlers for PepsiCo, which means from Diet Pepsi to regular Pepsi to Tropicana, they've got all up there in terms of where their portfolio is. The stock's done extraordinary. Extraordinary is the word in terms of the surge. 2017 up, 2018 up, 2019 up, COVID year up, post-COVID 45%, and 2022 they've managed to hit out of the park. Rahul, what's driving Varun Beverages? I mean, it's a stock which is now commanding a P multiple of what, 40, 50 times?
I think absolutely right. I think it's just been trading like your FMCG companies and way the Varun Beverages is. And if you look at, obviously the markets have been very good for them in terms of the growth sectors. Secondly, I think with the launch of, as you rightly pointed out, I think the sugar-free drinks in our soft drinks, I think that's going to drive more. Second, I think the dairy beverages, which they've been focusing on, that's going to drive the markets for them. Thirdly, I think way they have been into of the various other markets, as you pointed out, in terms of be it juices, be it soft drinks, be it energy drinks, which they're going to get into it. So I think all this way, which is it will be a growth structural story. They've been adding capacities and they've been increasing their strength as well as in Western and South India. So in all across pictures, I think there could be consistently growth compounder. So I think that's the year on year, if you look at it, where the stock has performed, the company has grown and the markets have been re-rating them. So at this level also at 45 times also, most of the analysts on the street expects that they will continue to deliver at a better rate, and then this will continue to perform. So as we also believe there could be another 15-20% upside from the current levels, from the current valuation as well.
The other stock which I want to bring out today, and we'll be showing an excerpt of 18 hours interaction with Mr. Rakesh Sharma, Bajaj Auto. Let's look at the stock here. Rahul, what's your view here? I mean, this is one sector. When I say one sector, two-wheeler sector, where the business is slowing down, and there is no large reversal in sight. Do you think Bajaj Auto deserves a different positioning because of its export business, or the aggregate picture will continue to hunker the P multiples down?
So I think if you look at the entire two-wheeler as a space, I think very few of them have been able to do well. And I think if you look at Hero has been underperformer and Bajaj Auto has been re-rated. So I feel that where the numbers with the launches, I feel this will continue. The valuations is very dirt cheap. I don't think so. They're expensive at that, any insane valuations. And what we see in last couple of months and couple of quarters as well, the earning trajectory has been what they've been talking about. So I think I would expect a major upside, but I think yes, 15-20% kind of a compounding with most of the large cap companies in the Nifty US which have been doing it. I think so. This will also compound in the same way, which looks like for next couple of years.
Okay. Rahul, stay with us. We've got a very special interview lined up. Let's hear out what Bajaj Auto's view is on exports as well as the kind of domestic growth in the two-wheeler market that they foresee.
I would say that the emerging markets story is far from exhausted. It holds a lot of potential still, and we are very optimistic about it. But we don't think it is going to sort of play out very rapidly. There are going to be ups and downs, and we will go through them.
So the down what you see in the last quarter, was that a one-off?
Well, the down cycle commenced really in the beginning of last year, which is FY23, in I would say April, May, June, when when there were changes which the Fed made, and the dollar became strong, and then there was weakening of a lot of emerging market currencies, which had which had two consequences. One was that there was devaluation in these countries, which meant there was inflationary pressures. And the second was that the central banks in these emerging markets took a very cautious position and started to preserve their dollars. And, so availability of dollars for international trade sort
Has that changed
reduced.
for you?
And that sort of set the whole cycle in the other direction. We are seeing some, let me say, bottoming out of this in the last 2-3 months, and now we are not seeing a rapid return to the period of FY21 and FY22 as yet. But as, like I said, the macroeconomics sorts itself out, and if there is no further geopolitical tension, because the fundamental drivers will start to kick in. And
All right, that's the big exclusive you don't want to miss. Meantime, lots of other stocks as well that we'll be tracking, and wanted to get in your take, Rahul, as to what the outlook is when it comes to Aurobindo Pharma. Just earlier we were discussing the outlook on this space, but as a whole as well, where is it that you're seeing value within Midcap Pharma in particular?
So I think overall, if you look at most of the pharma stocks have done well, but I think I would stick to a large cap pharma names rather than a mid cap pharma names. I think that's the reason primarily being the consistency of earnings, and there's been a lesser volatile. So in a pharma, after coming back as an entire sector after 2 years come back, so I think most of the stocks have done quite well. So I think Sun hitting like I think 6-7 years high now. It's been trading, and I think the management has been guiding. So this will continue to do well. So I feel my preference would be stocks like Sun Pharma with a consistent compounder. I think the risk versus reward would be quite favorable with the management strong guidance as well. So the preference would be Sun. So another 20% upside is easily can be made in from the current levels where the other pharma stocks have done. So I think this remains my top bets among the sector.
Talk about is HDFC Bank, and if we could just bring up the year-to-date chart and then perhaps, a 52-week chart as well on what HDFC Bank has then. And this year, it's down about almost 2.5%. Macquarie's got a very interesting note on HDFC Bank, wherein they're maintaining the outperform with a target price of 21.10 as opposed to the 15.89 levels it's currently hovering around, saying that the elephant will dance, be patient. Rahul, what's leading to HDFC Bank's underperformance, A? And
elephants can dance.
Yeah.
Yeah.
The elephant will dance, be patient. And do you think patience is going to pay? Will the elephant dance?
So I think way the HDFC Bank has underperformance, if we see in last 2-3 years, I think maybe this is the 4th year of underperformance. Say if I bring out the charts and if you look at it from 2019, I think 13.50, and the stock is today at 1600 holding us there. So stock has done nothing. So if I look at similarly with other large banks like Kotak, also has been done nothing. So but post merger, what I feel is I think 2-3 things positive side for it. What HDFC looks like, I think the kind of synergy between limited and bank, kind of the way the stocks have done it. I think the growth, which entire sector as a whole, what we feel is continue to do well. And I think the peak out of the interest rates, all these things are positive for the bank. But I think what's not driving is, I think one is obviously the adjustment by the mutual funds side to, can't own more than 18-20%, which most of them are holding it. So I think that reduction and that selling is bringing the stock down. But I think that's all technical factors for a while. But I think where the management's commentary and way that they're talking about that adding HDFC Bank every 4th year, the size of it. So I think this will continue to be a continuous compounder. So I think the patience will definitely pay off. And as they say that elephants can't dance, but I think my biggest bet, I think what I feel is from here in the entire banking sector, if the sector has to lead to HDFC Bank. So I don't think so. Underperformance will continue from here.
All right, Rahul, thanks so much for joining in, as always, and sharing with us your outlook on the markets. All right.